What's up, guys? Welcome back to DCA. So what we're going to do in this video is take a look at the risk of holding altcoins. So the markets have been moving from a place of essentially a risk-on atmosphere, basically going back to 2010. So we've essentially experienced nothing but a risk-on environment for essentially the entire time that cryptocurrency has existed. And now secondary to, numerous factors, including COVID and its associated lockdowns, the supply chain issues that come with that, the Fed's monetary policy in response to COVID. We have the geopolitical events in Ukraine and Russia, and many other factors. A lot of the things that we've been talking about for months now. These factors are pushing investors into a position of a risk-off environment. As the markets become more risk-off, essentially what happens is, you can think of it as liquidity drying up in the market. That's sort of where the economy, where the markets, you're seeing it as well in the stock market. Look at the NASDAQ. We've seen tech stocks selling off over the last months. And so that is going to bleed over to cryptocurrency. Cryptocurrency is not acting in a vacuum. We have to consider these things. And that's why we've been saying for quite a while now that ultimately holding cryptocurrency assets is going to be a risky proposition at the moment. And while a lot of people have been calling for the markets to turn around and for us to head to new all-time highs, we've been saying since December that these prices down here below 30,000 are completely in play, if not lower than that. Okay. So these are all things that we've been talking about for some time now. Another key topic that we've been talking about on my channel, essentially since I started, was the fact that if you're holding altcoins, if you're heavily invested in altcoins, when Bitcoin is in a bearish segment of its market cycle, which it is now, which it has been since December, if you're heavily invested in altcoins at that time, you're very likely, if you're just holding them and it's making up the majority of your portfolio, you're very likely going to get annihilated as the market begins to bleed and bleed. And I've got a lot of blowback from this and people telling me that I'm not right about that fact, that altcoins are, they're better than they were back in 2017, et cetera. Nonetheless, we've seen sort of exactly like we would expect. The market cycles are playing out exactly like they have in the past, obviously with nuances. Every market cycle is going to be unique in particular facets of the market are going to be unique. However, in general, the markets have played out very similar from this cycle to the prior one to the prior one. Okay. So a lot of things that are happening right now, we've been talking about because quite frankly, they were fairly easy to identify because we've seen them play out like this before. All right. So today we're going to specifically look at the risk of holding altcoins. And we're going to talk about last market cycle, the 2017 into 2018 bull market. And then we're going to look at this market cycle and we're just going to analyze how altcoins sort of behave when we're in these more bearish segments of the market. Because I think this is a key thing. A lot of people, I think, are underestimating the risk of holding altcoins. I mean, maybe they aren't anymore, obviously, as we've seen Luna essentially go to zero. So we've, acutely seen the effects of a bear market, at least with regards to Luna and associated Anchor Protocol UST. But we need to look at the other altcoins. And I think even there, a lot of people are starting to realize the fact that if Bitcoin is getting hit and it's getting hit hard, altcoins are going to absolutely get annihilated. Just like we would expect, on the contrary, that if Bitcoin is in a bullish segment of the market, you're going to see altcoins sort of, go on a rampage. Okay. So let's take a look at that. And we're going to do that with a metric that I've created. So this is a script that I've coded. It's a free TradingView indicator that will be available on my Discord channel. And what this metric does, it simply asks, is the asset at an all-time high? If it's at an all-time high, it's up here at this top level at 100. Then as it corrects off of its all-time high, it comes down, and wherever it's at, that's how many percent it is of its prior all-time high. So when we look at Bitcoin right here, it started making all-time highs in 2016, right? And then as it corrected down, we could see it's at 82. That means that it's at 82% of its prior all-time high, or it had lost 18%, or 17% in this case. All right. And then this would be the final all-time high it made in 2017, right at the end of the Bitcoin bull market, prior to correcting all the way down here to right at around 85%. So Bitcoin lost 85% of its value from December of 2017 until right here at its bottom in December of 2018. So within 1 year, it lost 85% of its value. All right. So we're going to look at this. We're going to look at altcoins with relation to Bitcoin in order to understand the market dynamics, because I think you're seeing a lot of things playing out exactly like they did in 2018 right now, where we're sitting at in 2022. Okay, so all we're going to do is bring this up, and if you want to get this metric, you can do the same thing. All you do is essentially, I've coded it so that you can enter in whatever altcoin you want. Now we're just looking at the top altcoins from the end of the 2017 cycle. So these are basically your highest altcoins by market cap. And what we can do is, you just click it and then you can compare. So the obvious comparison that we want to first make is Ethereum. And we see that as this bear market went on and dragged on, as it started for the first several months, so we're in January into February, into April, into May, all the way down here to July. So you have to imagine this is essentially 6 or 7 months after the bear market started. And Bitcoin and Ethereum were essentially neck and neck. In fact, Ethereum was outperforming Bitcoin at certain points here. Okay, so at this point right here, for instance, in April, Ethereum was only down 43% from its prior all-time high that it made here in January, whereas Bitcoin was all the way down here at 50%. Okay, so Ethereum at that point, in relation to its prior all-time high, was outperforming Bitcoin. But then at some point, that bear market, it just drags on and drags on and drags on. And then this is where Bitcoin starts to outperform everything. All right. So we see that Bitcoin, while it went down 83% from its all-time high, Ethereum eventually went down nearly 95%. Okay. And what we can do is just look at some of these other assets then. Okay. So this is XEM. So this was one of the top altcoins back in 2017. So this had one of the highest market caps at the end of the bull run. And you'll see that here it made its all-time high at the end of 2017, right at the beginning of 2018. But then what happened as the bear market started? So a lot of these more fringe use case assets just got absolutely hammered. And we saw that in spades here. So it went from an all-time high all the way down within, just 3 months. It had lost 90% of its value. Okay. So by the capitulation event that we saw here in November of 2018, it was all the way down to 96% of its value lost. All right. So kind of similar to Ethereum actually at its worst point. Okay. So we can just go through the list here then. And something I want to point out here. Ethereum did go on to make a new all-time high here in the 2021 cycle. So we'll just get rid of Bitcoin. You see that Ethereum, in spite of being down 95%, eventually went on to make a new all-time high. All right, now let's look at, this NEM that we just discussed. Notice, and I think this is the key point here. Notice that it never got back even close to reaching an all-time high. Okay, so if you were holding the asset in these ranges here, if you were holding the asset at this range, and even after this capitulation started in January of 2018, you barely ever even got back to that price in this market cycle. So in February or March, it got to around 40% of its prior all-time high here. Now, this is a nuanced point though, because at its face, you might say, well, this would be a terrible investment. Perhaps that's true. And, I do think investing in things like this are, in general, terrible investments. However, consider if you bought once it had got down 90% or so. And, don't take this as an endorsement for me telling you to buy sort of these fringe projects when they're down 90% or whatever it may be. Because in general, I don't endorse doing that. I endorse investing in projects with strong fundamentals, projects which are very likely to be around in the next market cycle. However, even these projects, even some of these more fringe projects or projects which hadn't really reached any sort of significant adoption, these projects, once they started to reach these massively decreased prices down here, dropping 97% of its value, dropping 95% of their value, a lot of these actually were great investments throughout this bear market into the bull market. Because if you look in relation to its prior all-time high, it recovered 40%. But you have to recall it was down nearly 97 or 98%. So buying at a discount can certainly be a good opportunity. It just all comes down to how big of a discount are you getting? Because at the end of the day, if you were buying when it was down 65%, down 75%, you weren't getting that good of a discount. You were buying an asset that you basically had to sell right at the top, or you were going to take a loss. So it wasn't until, there was absolute bloodshed in the market where, the asset started to get down 85, 90%, 90% plus, that the value really started to show itself. Okay. And we can just see that basically throughout a lot of these projects. So we can look at Tron. This was one that actually did go on to, recover a decent amount of its value. So anywhere from 60 up to around 70%. And quite frankly, it was only at its high there for a very short amount of time. So basically buying this asset at any time in the bear market would have more or less been a decent investment. Okay. Not as good as you could have done, but a decent investment nonetheless. XRP is another example of one where if you bought and held during the bull market, you basically are at a loss. And this is why we talk about a lot on the channel. You don't want to be buying in the middle of a bull market after it's already making, well into all-time highs. It's not a bad idea to wait for Bitcoin to go on its run and then to get into altcoins and then sell them in the same market cycle. But it's usually a losing proposition to be buying altcoins in the middle of a bear market or in the middle of a bull market and then holding them, hoping that they go back to their all-time high in the next market cycle. Because of the examples we've seen so far, only Ethereum has actually been successful in doing that. And we can just keep looking. IOTA. So we've looked at XRP, IOTA, electrical optical systems. Okay. Again, none of them, not a single one got above 70% of its prior market cycle all-time high. So if you look at things like NEM, you had a significant amount of time to buy this asset over here in the bullish stage of the market, because recall Bitcoin started making all-time highs right over here. So you could have been buying NEM all during these times and you would have been getting crushed in this market cycle. Whereas if you were buying down here, maybe once it was down 95% or so, that was ultimately going to be a decent trade for you. Again, though, it's still not a great trade. You could have done much better than this with many other assets. Okay. So a lot of it comes down to the fundamentals that you're investing in. So like we said, IOTA, EOS, these things never got back. And you had a lot of time where you could have bought and held in this bullish phase of the market and just never recovered that money. Then, if we come all the way down to XLM, this at a very short amount of time did get back to its prior all-time high. However, essentially it's, been right about where it was at during the last market cycle. So ultimately what we're getting at here is just because it seems like you're getting some sort of great discount when we're down 70% or so, this could very well not be a good investment if the asset's only down 70% on an altcoin. And then Litecoin, again, a lot of time where you could have bought way up here in the bull market and then held. and you never would have recovered your money, or you would have had to sell exactly at the top in order to recover your money. And how often do we actually sell at the top? It's very rare. It's very difficult. As per usual, as with everything else, once it starts getting into these highly devalued levels, with capitulation in the market, once it's down 80% plus, these can be decent investments. Although I still contend that if you're looking at something like Litecoin, and I know this may offend a lot of people because Litecoin at the end of the day has a lot of holders. If you're, heavily invested in Litecoin, it's secondary to Bitcoin. So if you're secondary to Bitcoin, you're basically investing in the second best investment, sort of in this kind of, I know they're not the exact same thing, but they sort of compete with one another. So why wouldn't you be just invested in the one that the market favors more anyway, which is Bitcoin? Because ultimately you're taking on a lot of risk here with Litecoin, and you don't have the same upside potential. There's one other thing I want to show you, actually. I want to show you that if an asset gets out of line with the market, so take this time period right here in 2018. We're talking about EOS here. Notice how one asset is sort of completely out of line with the market. And that asset is right here. We're talking about EOS. EOS went on a massive run here, sort of by itself. It went up and made a new all-time high. And this is one thing you'll see that's a critical thing to recognize in the crypto market. If you have an asset that sort of gets out of line with the rest of the market, so it's up at a new all-time high while, Bitcoin is down here in the dumps, Ethereum's down here in the dumps. EOS, however, was setting a new all-time high right here in May of 2018. When that happens, and this is something you can take with you going forward, pretty much in any investment, when we see this, you usually have just an absolute chaotic correction right after it, because these things usually happen with, there's usually some sort of market manipulation going on behind the scenes, and then the retail market FOMOs in, and then, they just become a fire sale after that, because someone drives the price up. They use the retail market who's entering into the trade as exit liquidity, and then they dump on the market. Okay. So you saw EOS go from a new all-time high here in April, while the rest of the market was getting hammered, all the way down within, 8 months to being down 92%. All right. And it was sort of the only one of the big assets that we're tracking here that did that. It was one of the only ones that got out of line like that. All right. So you can see that nothing else really is an outlier of any sort other than Bitcoin. Bitcoin's the outlier because it's the market mover. We always say you don't have as much upside potential necessarily with Bitcoin, but you have much less overall downside risk. And Bitcoin is usually the asset which is leading the market from the bearish phase into the bullish phase. As you see here, Bitcoin was only down, 50%, while everything else was down 80% or more. Okay. So now let's look at this market cycle. All right. And when I say this market cycle, we're going to be looking back to 2018 again, but we're looking at the top assets that sort of led the way in this cycle. Just like last market cycle, they're sort of head to head as we're heading into this bearish phase of the market. However, I sort of believe that if this cycle continues bearish, if it continues on bearish as time goes on, I think you may see Bitcoin sort of hold its value better. Now, I can't guarantee that, especially as Ethereum has sort of gained a lot of adoption this cycle and its use case has become very clear. So Ethereum may be, an asset which holds its value sort of like Bitcoin did in the last cycle. So that's one of the key things I'm going to be watching. And I think it's one of the most interesting points in the market, because you've seen Bitcoin and Ethereum. I mean, you can see that basically ever since January of 2021, these two have essentially acted right in conjunction with one another with small differences here and there. Okay. So there have been times when Bitcoin's outperforming slightly. There have been times when Ethereum is outperforming slightly, but overall they're essentially neck and neck throughout this entire market cycle. All right. So the next thing we'll look at is Solana. And you can see Solana is now down 80%. Now, Solana looks like it could be one of these assets that sort of has potential to come back in the next cycle because it has gained adoption, and that's going to matter. Your adoption, your use case, your fundamentals are ultimately going to matter. Now, there are other questions with Solana, like, the network going down, things like that, extremely low transaction fees, and where's the demand going to come from? Where's the, with the fees being so low, what's going to prop that price up? If you can get one Solana and pay for fees for an entire year, what will be driving demand? So there's questions like that, and that's very simplistic. That's a very simplistic way of looking at it, and there's some answers to that question, I think. But these are the questions that Solana is going to have to ask. It's also going to have to ask, can the network stabilize? Can it continue to compete with Ethereum? We're seeing exactly like we saw in the last market cycle. It's not Bitcoin, and it's getting hammered with relation to Bitcoin. So Solana has come down all the way down to 80% below its prior all-time high. So are we at a value stage for Solana? And if you believe that it's going to reach those speculative prices that we saw, in this market cycle, then it's probably a great investment. But if you kind of, if you think that Ethereum is ultimately going to win out in the L1 competition, then it's still, in my opinion, questionable. So I wouldn't, personally, I'm not FOMOing in just because it's down 80%. I may pick up some of the asset, and I'm not sitting here, I need to stress this. I'm not sitting here advising you not to or to buy an asset. I'm advising you to consider all of the facts associated with the asset, all of the facts that we know about, what we saw in the last cycle. That 80% being 80% down may be a good investment. So if we just, come and look at any one of these, EOS, for instance, when we were 80% down, we ultimately then went up 50%. But do you really want to be taking on the risk right now to get a potential 2x in multiple years from now? And to me, that's not a risk that I'm willing to take, at least not any sort of a significant portion of my portfolio. I'm not going to FOMO in just because we're down 80%, because if this market drags on like this, I really believe that you're going to start to see a lot of these altcoins down 90% or so. And, that's a significant difference from where we're at right now. Okay. So for Solana, for instance, and I'm not saying it will do this, but if Solana were to go down 90% from its prior all-time high close, that would be at around $25. Okay. Compared to the $50 that we're at now. And at $25, Solana becomes vastly more attractive than where it's at right now. So we can just continue looking. Cardano, again, it's at around 19%. So it's down 81% from its all-time high. Avalanche is down around 70%. Okay. Matic is down around close to 80%. Okay. Chainlink, it's currently down 85%. Now, Chainlink is one where I think it's starting to enter into that value zone because, again, we talk about fundamentals. Fundamentals are going to be important. And in my opinion, Chainlink has some of the strongest fundamentals in the crypto market. We know that Ethereum is competing with other layer ones. We know that Solana is competing with Ethereum. Chainlink's not really competing with anyone, and the entire smart contract industry essentially needs Chainlink to operate in a safe and reliable manner. So this is one where, again, I'm still not FOMOing in at 85% down because I still think there's additional downside risk, but I think that Chainlink starts to become an attractive option in this zone. Okay. So then we could just continue looking. Polkadot, same thing. It's down around 80%. Near Protocol, it's down around 70%. Okay. So it's just a repeat of the conversation that we just had. If you're looking at these assets and thinking that just because we're down 80%, 70%, we've demonstrated quite clearly that assets, which even ostensibly, they're great assets, it doesn't mean that if the bear market goes on and on and on, You have to imagine a lot of people in these markets, a lot of people that are invested in altcoins are retail market investors, and they sort of get worn out. You know, the smaller net worth an investor is, the more likely it is that as they get hit and hit and hit, they may need to sell for various reasons. Whereas if you're a super high net worth investor and you just have a small percentage of your portfolio invested in one of these altcoins and it goes to zero, then you're ultimately going to be theoretically okay. But if you're a smaller retail investor and you may have 25% of your portfolio in Luna, let's say, well, that was absolutely devastating. So that may force you to sell other assets. And so as the pain continues and grows and grows and grows as the market cycle goes on, it becomes more likely that the liquidity in the market dries up, and you see the prices as a result just continue to trend down. So that's kind of that's where your risk stands. And that's why looking for value and being patient often pays off, and it can really pay off in spades, even if you're investing in something that, ultimately is never going to recover. Something like, let's say, IOTA. If you're waiting for for a good value, if you're waiting and you're patient, especially as the market is showing a lot of uncertainty at the moment, I think there are going to be some truly spectacular deals. And, my opinion of these various assets right here, it's different for each one. But I think that all of these, at the end of the day, if they start to get down 90% plus, that's very likely going to be a good value zone. Now, I can't say that definitively. Perhaps some of them get, never recover and never even recover past a 90% loss. I think that unlikely, but we don't know. We don't know what the markets hold. So, when we're doing this, when we're thinking about these things theoretically, we have to just think about it statistically. What are the probabilities of it recovering based on X, Y, and Z? And in these cases, we're thinking about risk factors in the market. So how long does the bear market go on? Do we actually enter into a full out recession, or is it a short-lived market correction? And we don't know, but what we can do is sort of look at all of the events that are going on and say to ourselves that, well, right now the market is showing a lot of uncertainty, and because of that, it's very likely to be that we're going to continue to see some more downside pressure. And as that happens, we may find ourselves in a situation where we have some truly great opportunities. So none of this is financial advice, guys, but it's just kind of how I think about the market. It's the aggregate way which I'm thinking about the market, and I'm thinking about risk of altcoins. So that's going to be it for this one. Until next time, as usual, see you.